It is 10:02 a.m. Pacific Standard Time. It's the 24th day of January 2025. This is episode, well, wouldn't you know it, 1025 of Bitcoin. And, well, the Trump executive order came out. So we're going to get into a little bit of that. And Lola Leets has a counter argument to most of the arguments that were made yesterday given this executive order. But then we're going to push on over to the European Central Bank, where they are absolutely losing their minds. They are running scared. They are freaking out. And I guess this has to do with the fact that pretty much all of Davos is in some kind of seems to be in some kind of damage control mood, because you got this, one of the head honchos out of Spain is talking about complete dissolution of any anonymity when it comes to identity online. He's specifically talking about, social media, but that would bleed over into pretty much anything. You wouldn't be able to pay a parking ticket online without proper identity, even though, yeah, I know if you got a parking ticket, your identity is already known. I get it. I'm just saying it's going to be a lot more than social media. You got there's another person over at Davos that's talking about the same thing. They just have to do away with any kind of anonymity. And this, to me, all just seems like some kind of absolute losing their minds, hair on fire, running around, trying to do some kind of damage control. I can't imagine what they're trying to control damage from. Maybe it would be because, well, Orange Man. But the SEC, the Securities and Exchange Commission, has, well, rescinded a major rule. MicroStrategy may owe some taxes on unrealized gains. This is rather disturbing. We'll get into that one. Bank of Japan is also going to be in the news. There might be a yen carry trade issue coming. I'm going to talk a little bit more about this Ethereum mutiny / collapse / damage control. They're doing some damage control themselves. Breeze is in the news, and the U.S. federal court has ruled on something that may be unconstitutional. We'll get into it. And then we've got a little bit of real estate news. And I want to begin by saying that CoinDesk looks like they are going over to some kind of subscription model. However, since I discovered that yesterday, the message on CoinDesk.com seems to have changed. It's a major news outlet that I use to bring you the news. They are throwing up a banner that says you need an account, but now either I didn't notice it yesterday or they've changed it. They want you to register for a free account, and yeah, they don't have any ability to use a nostr ID. They want your email. So no matter how far down this road we travel, it seems to me that nobody is understanding what we have at our fingertips, and that there is just no way to get these people to understand we're kind of done with all this bullshit identity crap. We don't need it. We don't want it. It's not good for anybody. It ends up being a major honeypot. So I'm just waiting for CoinDesk to figure it out, and I honestly doubt they will. But let's start with the Orange Man. It's been a wild week for the Trump administration, doing all kinds of neat stuff, I guess, depending on what you think is neat. It is definitely different. All right, so it is not, I mean, a lot of us kind of expected some collateral damage on the left, but I do not think that the left figured out as quick as they should have just how immense the collateral damage was going to be. But he did the executive order. He did it. He signed it. And it's great, right? Well, I don't particularly think so, because it just sounds like a dumpster fire to me. And let's start it off with Andrew Hayward and Sandra Lutz writing for Decrypt. Trump executive order paves the way for federal crypto reserve, but doesn't mention Bitcoin, like at all. President Donald Trump signed his first crypto-related executive order on Thursday, formally establishing a presidential working group, oh boy, on digital asset markets and laying the groundwork for exploring some of his campaign promises, including potentially establishing a national reserve for Bitcoin and other assets. The presidential working group will advise Trump on matters related to crypto policy and inform his decision-making with regards to the industry. Its day-to-day operations will be managed by a guy named Bo Hines. Nice name, bro. A one-time Republican congressional nominee and former college football player. Yay! The group will also include the Secretary of the Treasury, the SEC, and CFTC heads, and other department and agency leaders. Decrypt previously reported that the council is expected to consist of 20 crypto founders and CEOs, industry donors to Trump's presidential campaign, and perhaps his inaugural fund as well are likely to be prioritized. The group doesn't have any real authority besides the opportunity to advise Trump and Congress, who will make their own decisions. The executive order, titled Strengthening American Leadership in Digital Financial Technology, further tasked the group with exploring the premise of a strategic national digital asset stockpile following Trump's campaign trail promise to establish a Bitcoin national reserve. Yeah, you see the difference there? Anyway, such an idea has been furthered by the Senate via Senator Cynthia Lummis's Bitcoin Act. Plus, several states are now considering their own Bitcoin reserve legislation. However, the executive order does not mention Bitcoin by name, nor does it mention any other specific crypto asset. Furthermore, the order notes that agencies are blocked from launching central bank digital currencies, which are often referred to as digital dollars. These centralized cryptocurrencies have been widely derided by Republicans due to privacy concerns. It also aims to protect and promote the rights of American companies and citizens to transact in self-custody cryptocurrency, mine crypto, and validate blockchain transactions and launch blockchain software. It is also expected that Trump will follow up his first crypto-related executive order with several more. A top priority for the industry has been repealing the SEC's SAB 121 rule, which discourages American banks from holding crypto. Congress repealed that last spring, but former President Joe Biden vetoed the legislation, leaving the rule in place. Other crypto policies that Trump may address in future executive orders include eliminating the SEC's controversial exchange rule, which targets decentralized financial products, and directing federal agencies, including the State Department, to make fostering crypto innovation a national priority. With or without executive orders, though, the Trump administration is already off to a running start when it comes to crypto, and on Tuesday, the SEC established a new crypto task force led by Hester Pierce, the emphatically pro-industry commissioner. The task force will aim to craft sensible disclosure frameworks that will allow crypto projects and companies to register legally if needed. Doing so will end the SEC's long-standing effective policy of regulating the industry by enforcement, an approach that brought much uncertainty to the sector and pushed many firms out of the country. They didn't get pushed out. They ran away from this bullshit. Anyway, so this working group came right before he actually signed a full executive order to establish a national crypto reserve, not a Bitcoin reserve. And, well, rightfully, everybody's not losing their minds about it, but they're not happy, and rightfully so. I'm not happy about it because it's just let the shit coining commence, because that's all it tells me, is that it's just going to be a absolute dumpster fire. People are going to lose astounding amounts of their money at the retail level, not just institutional. But at the retail level, it has opened the floodgates for every scammer to just have a heyday. And I don't think it was the right thing to do. In fact, I would have rather him said, you know what, we're not going to do a strategic Bitcoin reserve. Instead, he should have just said, we're going to let each individual state of the United States find their own path, forge their own way. Some states will choose Bitcoin only. Some states would choose Bitcoin and a whole basket of shitcoins. Other states will go shitcoin only. But it should be up to the states to be able to do that, because the states that actually do figure it out and start either a full 100% Bitcoin strategic reserve, or at least a strategic reserve with Bitcoin as a major player in a basket along with a nest of shitcoins, would bolster the entirety of the United States. You don't really need, when you think about it, if the states are able to do it themselves, then at the federal level, there's not really a need for a strategic Bitcoin reserve. But that's not the way it went. We're going to be dealing with Ripple for the rest of our lives. We're going to be dealing with Solana for the rest of our lives, and Tron, and all of the other bullshit. And I wish it wasn't that way. I really do. But here we have Lola Leets, who seems to be taking a different tack on this executive order that allows shitcoinery to go full force in the United States. It's Lola Leets, and she has a note here on Nostr that says, so the Trump's crypto executive order is out, and I'm seeing lots of weak bitches cry that it's a shitcoin reserve. See, she's talking directly about me. Although I didn't cry, I'm still not happy about this, but she's talking about me. Given the fact that the proposed digital asset stockpile would possibly be built on seized coins, let me give you a quick introduction to forfeiture law and why crying for daddy to please, please make its pile of flying horseshit Bitcoin only, literally, the most retarded thing you could be wishing for ever. I'm going to pause there because when she says seized coins, in the executive order, there's language that expressly says building this stockpile, this national crypto reserve stockpile, off of coins that have already been legally seized by the United States. All right, so that's what she's referring to when she says seized coins. And they were, in fact, forfeited by the person or persons or institutions or whatever that got in trouble with the U.S. government. It was a civil asset forfeiture. That's the way this thing works, and she's going to talk about it right here. Forfeiture law, or civil asset forfeiture, to be precise, is this fun little game the government plays in which it does not have to accuse you of a crime to confiscate your property. Instead of accusing you of a crime, the government claims that the asset itself has facilitated a crime and can therefore be seized by the government. In civil asset forfeiture, there is no innocent until proven guilty. To get your property back, you have to prove that the government is wrong, which turns out pretty complicated, seeing how it's impossible to prove a negative. Civil asset forfeiture results in cases that are not filed against a person, but filed against the property itself. This results in fun little cases like the U.S. versus Binance account XYZ or U.S. versus 123 Wilmington Drive. To extend this idea to Bitcoin, in a civil forfeiture case, the U.S. government is, in theory, able to seize any Bitcoin that has ever come out of a criminal transaction. Made some Bitcoin by selling a service? Bought some Bitcoin on a P2P exchange? Unless you check that the UTXO you received has never touched a criminal transaction in its entire history, your coins can be confiscated. And there's pretty much nothing you can do about it. Yeah, I got something to say about that. You'll hear it in a sec. As Cato Institute points out in its piece on civil forfeiture reform, forfeiture law is routinely misused to enrich the government. Philadelphia, for example, seized over 1,000 homes, 3,000 vehicles, and over $44 million in cash over an 11-year period. In 2010, the city tried to seize an entire fucking house because a woman's grandson sold less than $200 of weed out of the basement. If you think taxes are bad, civil asset forfeiture is straight up evil. It doesn't matter whether you participated in a crime. It doesn't matter whether you know that someone else participated in a crime. If it involved your property, even if said property was fully legally acquired, the government will come and take it. Civil asset forfeiture is the most insane government funding technique that is out there. And you most definitely do not want this declared as a strategic means to pump the government's Bitcoin bags. You are literally asking the government to steal your coins with a practice that every libertarian advocate wants to see abolished. Okay, that's the end of the note from Lola Leitz. She's got a point, but she's not entirely wrong. I think that she kind of deviated from the original, from her original outset view of this note, where she was saying that we shouldn't be crying about a crypto reserve, or it's a shitcoin reserve. I'm having like a little bit of problems parsing out exactly what she means. If Lola is saying that there shouldn't be any kind of reserve whatsoever with this language that includes the possibility of civil asset forfeiture, then I have to agree. If she's not saying that, then I'm kind of not sure what she's getting at. So I'm going to just make the assumption so that I can move on that she's talking about this shouldn't actually exist in the first damn place if it's going to include civil asset forfeiture. And again, I agree. However, where she says that the government can come take my coins and there's nothing that I can do about it, that's where she's wrong, but it doesn't mean that I wouldn't pay a price. Well, this is what I mean. The government comes to my door, and in my house, I have literally no ability for them to be able to get my Bitcoin, i.e., I don't keep my passphrase anywhere on my premises. I keep it somewhere else. Maybe I buried it in a public park somewhere. I know that's stupid, but just bear with me. Let's say that I physically do not possess any means upon me to be able to turn over my coins to the government if they decided to, torture me in my house. They can't get my coins. It's impossible for them to get my coins. Now, let's say that actually occurs and they say, Mr. Bennett, if you don't hand over your passphrase right now, you're going to jail. Okay, yeah, I probably will. I very well might. I could do the whole, I don't have control over it anymore. I lost the keys, whatever. But that's going to be a little weak in the face of a bunch of FBI guys. Right? It just is. No matter how much we want to say that it isn't, it is. It's weak. Yeah. And I'm probably going to end up in jail, but that still doesn't mean that they get my coins. So would they be able to put me in jail for life? I don't know. So here we come to something that I've been thinking about for a good long while. And that's this notion of us remaining civilized as a citizenry of the United States. And you can just expand that to the rest of the world if you want. Given what people over at the Economic Forum in Davos are saying over the course of this week, it has become clear to me, and it always has, but I mean, it's even more clear to me now that they don't like us, they don't really care about us, and they will do whatever it is that they need to do to make sure that we remain poor and they remain rich. And when people start threatening my ability to be able to say something, and they're not even from my own country, and somehow or another they're going to they could possibly impact my ability to say something, at one point or another, we start asking the question, why are we not dragging these people out into the street and literally putting upon them that which scares them to within an inch of their life so that they are traumatized forever and therefore never ever want to serve in public service ever again, and will dissuade their children and their grandchildren from ever serving in public service? Why do we essentially keep saying, but that's not a civilized society? Does this look like a civilized society where the U.S. government can just come take your shit because your shit was involved in a crime that you had no clue was going on? That's not civilized. That's violence. And at one point or another, I feel that the citizenry of the world, not just any particular country, but the citizenry of the world will get their fill, and they will be forced to do something that actually looks like violence to the rest of the world. That's what I'm worried about. And that it will break free. There was a movie, something about like where one night every year there was no laws and you could do whatever the hell you wanted. I can't remember the name of it. If somebody remembers, please, make sure that you boost the show and tell me what the name of that movie is. I'm worried that kind of shit is going to happen, because that's what's happening to us. Ross Ulbricht got free after essentially being dragged into the street and beaten to within an inch of his life, even though not physically, but legally, beaten to within an inch of his life. And now he may very well not actually ever want to say anything ever again because of fear of going back in the hole. So how is it these people are able to do violence to us and they just get away scot-free and they have no pushback at all? It's because of this notion of, but that's not the way a civilized society runs. You can't do that. You've got to protest. You've got to hold up a sign and walk around in a circle for about an hour, and then maybe, just maybe, they'll actually listen to you. No, this is untenable. And it's going to break free in a way that nobody wants it to break free. But I get the feeling that these people cannot stop the way that they're acting. So when we go back to what Lola Leitz is saying about civil asset forfeiture, I, at this point, am kind of in agreement. If it's going to contain stolen property, then I would rather we not have any kind of strategic reserve at all. It's not good for us. It's not good for the United States. It's not good for the world. But what is good for the world is the Circle P, which is open for business right now. And today I'm bringing you plebeian.market. That's plebeian or plebeian, depending on how you actually want to pronounce it, .market. If you have not been over there, it is based on nostr, which is flying in the face of all the people at Davos right now. And it's a market. You can go buy stuff. You can go buy a shirt with a great big old BTC smile on it. And yes, it's a happy face and the eyes are the Bitcoin symbol. Please don't wear that because it makes you a target, as I've said. But there's also, there's a handwritten or a hand-drawn drawing of fuck the fucking fuckers. There is a hand-drawn ashtray or a rolling tray, if you like to, smoke pot and whatnot like that, of a skeleton. There's all kinds of neat stuff. And you buy them all for Bitcoin. Here's a cold card Q for 250,000 sats or 0.003 BTC, and there are 4 in stock. And you can buy all of this. You can buy kombucha. You can buy a block clock. You can buy a Ross Perot ball cap. Holy crap, dude. I haven't seen a Ross Perot hat in a long time. You can buy hot chili jam and Scotch bonnets on Plebeian Market. Plebeian.market, Plebian. You can use whatever wallet you want. But here's one of the things that I want to make sure that you know about. One of the people that is on the Plebeian Market is one of my favorite artists on Nostr, which is Isolabel. I think that's how you pronounce it. Isolabel.art. ISOLABELL.art. He's running a massive sale on his art, and if you haven't seen his art, it's absolutely wonderful. And he's just, that's what he does. That's what Isobel art does, is just paint paintings, and they're wonderful paintings. And he has just passed 30,000 followers on Nostr. So all of his paintings purchased within the next 24 hours will be sent with free shipping, and that's worldwide. That is worldwide, guys. So if you love his art, and if you haven't seen his art, you can go to Isolabel, ISOLABELL.art. That's his website, and you can view it all. I bought one of his pieces for my sister for Christmas. Absolutely love it. But there's all kinds of stuff on Plebeian Market and Plebeian.market, and if you want a circular economy to occur, then make sure that you go check out plebeian.market. You can log in with your Nostr credentials, It's amazing. And then once you're there, go look for ISO Labelle art, and you will find some great pieces there. Now on to the European Union, where the European Central Bank is pushing for a digital euro in response to Trump's crypto executive orders that could further disintermediate banks. And Brian McGleenan is writing this one for the block. Eurozone banks need a digital euro to counter United States President Donald Trump's efforts to promote worldwide United States-backed stablecoins, according to European Central Bank board member Piero Cipollone. Speaking at a policy meeting in Frankfurt, not Davos, but in Frankfurt on Friday, Cipollone highlighted the potential impact of Trump's latest initiative on global finance because on Thursday, Trump signed the executive order aimed at bolstering U.S. leadership in digital financial technology, emphasizing the protection and promotion of the United States dollar's sovereignty. The order includes provisions to support, quote, the sovereignty of the United States dollar, including through actions to promote the development and growth of lawful and legitimate dollar-backed stablecoins worldwide. What have I been telling you over the last 6 weeks? The stablecoins are going to be linked to the dollar through the United States Treasury bond market. That's the way this shit is going to work. Anyway, at the Institute for Law and Finance's 13th Conference on the Future of Financial Sectors, Cipollone cautioned that the Trump administration could further attract customers away from traditional banks, amplifying the need for the ECB to accelerate its digital currency plans. Quote, I guess the key word here in Trump's executive order is worldwide, Cipollone told a conference in Frankfurt on Friday, according to Reuters. Quote, this solution, you all know, further disintermediates banks as they lose fees, they lose clients. That's why we need a digital euro. See what I mean by the hair on fire running around like they have to do damage control? This is not going to have the effect that they want. It's going to make it worse for them. I guarantee it. But to finish off, a digital euro would function as an online wallet guaranteed by the ECB, but operated by private entities such as banks. This system would enable users, including those with a bank account, to make payments. However, individual holdings would likely be capped at a few thousand euros and would not earn interest. The ECB is currently testing how a digital euro might work in practice, but will defer a final decision on its launch until the bloc's lawmakers pass the necessary legislation. In contrast, U.S. President Donald Trump's recent executive order explicitly prohibits the Federal Reserve from issuing its own central bank digital currency, underscoring his administration's focus on promoting private dollar-backed stablecoins instead. We thought the dollar was weaponized before. Oh, baby, you ain't seen nothing yet. This is how to put this. I'm trying to figure out a way to incorporate dollar milkshake theory here, but this is like dollar milkshake theory on steroids with a nuclear generator attached to it. This is absolutely 100% the United States' last attack on the rest of the world. And I don't necessarily, mean that, well, I don't think it's a good idea. But I also, it's like if I was living in any other country than the United States, I'd be really pissed. I'd be absolutely horrified if I knew, as a person living in something like, if I was a Frenchman or an Englishman or something like that, and if I knew what I actually know, I would be more than horrified, because this is a complete weaponization of the dollar. And it's probably going to work. That's what I'm getting at, is that it's probably going to work. It's probably going to just decimate, if not utterly annihilate, every single fiat currency over the next 4 to 8 years. If the next administration that gets in continues this particular thought process, you can kiss any other currency other than the dollar and Bitcoin, goodbye. Well, and Tether and USDC and stuff like that, because the stable coins are here to stay. And this is what I have been warning about over the last 6 weeks. There's going to be stable coin scams out the wazoo. They're coming. People will literally spin up a coin, say it's a stable coin, tell you that it's backed by the United States dollar, and lickety-split, you will lose any money that you put into that system. It's going to be just like an altcoin scam, just like a shitcoin scam, just like the ICOs of old. It's going to be the exact same thing, and they will have absolutely no intention of being an actual stable coin. They will exist primarily to get your money and then rug pull your ass and leave you with nothing. Just because they say it's a stable coin does not mean it's actually anything other than a scam. You will need to be aware of this, because otherwise you're going to lose all of your money. Now, we had mentioned the SAB 121. Turns out that the Securities and Exchange Commission has rescinded SAB 121, permitting banks to custody Bitcoin. The SEC did it themselves. Trump didn't do it. Well, I'm sure he made a phone call, but it was the SEC themselves that did it, because remember, Congress had passed a law, or wanted to pass a law, that rescinded this thing from the congressional side. Biden vetoed it. This is the SEC themselves doing it, and it's from Bitcoin Magazine, written by Vivek Sen. In a landmark decision, the SEC has officially rescinded Staff Accounting Bulletin number 121, a rule that had long hindered banks from offering Bitcoin and crypto custody services. The move, announced on Thursday, signaled a significant shift in the SEC's approach to regulating Bitcoin and crypto, and paves the way for greater financial integration. Introduced in March of 2022 under the former SEC Chair Gary Gensler, SAB 121 required institutions holding Bitcoin and crypto assets for customers to record those holdings as liabilities on their own bank balance sheet. And that was the problem. This accounting standard created significant operational and financial burdens for banks and custodians, effectively discouraging them from providing Bitcoin-related services. The rule was widely criticized by the crypto industry and lawmakers, with SEC Commissioner Hester Pierce famously calling it a pernicious weed. Quote, "Bye-bye, SAB 121. It's not been fun," Hester Pierce wrote in a post on Twitter on Thursday following the SEC's issuance of Staff Accounting Bulletin number 122, which formally rescinds the guidance. The SEC's move to rescind this comes just days after Gensler's resignation and marks a start of a new era under Republican leadership. And according to SEC Chair Mark Oyeda, who assumed the role on Monday, he quickly announced the formation of a crypto task force led by Hester Pierce to craft clearer and more practical regulatory frameworks for the industry. Quote, "To date, the SEC has relied primarily on enforcement actions to regulate crypto retroactively and reactively, often adopting novel and untested legal interpretations along the way." End quote. With the removal of SAB 121, major banks are now expected to move swiftly to integrate Bitcoin and crypto custody services into their offerings. This is a significant milestone in the financialization of Bitcoin, bringing it closer to mainstream adoption. So you might ask yourself, that's the end of the article, by the way. You might ask yourself, well, why did it matter what exactly did this do? Okay, so here's the nutshelling it. I'm a bank. I want to offer crypto custody services under the standing SAB 121, let's say before it was repealed. And they say, sure, you can do that. You got to put all the Bitcoin that you hold for your customers on the balance sheet. I say, sure, fine, let's do that, along with my United States Treasury bonds, because I have to list that as liabilities as well, right? Okay, so now Bitcoin goes up, and I have to, I'm recording that on my books. I'm saying, hey, look, we actually have more money than we did in terms of U.S. dollars. But let's say the U.S. Treasury bond market just shits the bed, and the principal value of all the bonds that I hold just fall through the floor by, let's say 50%. Well, all of a sudden, my bank's insolvent. just like Silvergate and all the rest of the banks that happened in, what was it, 2022, 2021. I can't remember when those three banks went under. But essentially what happened is the treasury bills or treasury bond values shit the bed. And all these banks, not all of them, two of the three actually did not have the money to pay back all of the people that they needed to pay back if all of the people demanded their money at once. So they were effectively insolvent, and the world saw it. All banks are insolvent, but these banks, the whole world saw that they were insolvent, and then they were basically taken over, liquidated, and then given over to other banks. Okay, that's what happens with the U.S. Treasury bond. Now, let's do the exact same experiment, except the bonds are fine, but Bitcoin shits the bed by an 80% drop, and I've got it listed on my books as a liability. All of a sudden, same thing. I don't have the money to be able to pay back all the creditors if all the creditors come to my door and demand their money all at once. Therefore, I've got to liquidate the bank, the FDIC takes it over, and the next thing you know, I'm owned by Jamie Dimon. And that's why nobody wanted to do this. And the fact of the matter is that the difference between the treasury bond on their liability sheet versus the Bitcoin on their liability sheet is that the bonds are actually owned by the bank and not by the creditors. The bonds are there, and a lot of the other things that a bank holds are there to be able to liquidate just in case they need to actually come up with ready cash because there is a run on the bank. The Bitcoin in this particular issue is directly owned by the customers, yet would have to be listed like bonds as a liability on the bank's balance sheet. And that is one of the reasons why none of the banks would touch it. And honestly, I wouldn't touch it either because of that particular issue. But now that SAB 121 is gone, as replaced by SAB 122, rescinding that matter, now all the banks in the United States will be able to custody and not have to list those assets on their balance sheet. We'll have to see what that actually does, but it could be a free-for-all. Who knows? But MicroStrategy is not out of the woods. In fact, they might have dug themselves a little bit of a hole, according to this report that says MicroStrategy may owe taxes on $19 billion of unrealized Bitcoin gains. This is Zoltan Vardai from Cointelegraph. Despite never selling any Bitcoin, MicroStrategy may have to pay taxes on unrealized gains. The largest corporate Bitcoin holder may have to pay federal income taxes on its unrealized gains, according to something called the Inflation Reduction Act of 2022. The act established a corporate alternative minimum tax under which MicroStrategy would qualify for a 15% tax rate based on the adjusted version of the company's earnings, according to a January 24th report in the Wall Street Journal. Still, the U.S. Internal Revenue Service may create an exemption for BTC under President Donald Trump's more crypto-friendly administration. MicroStrategy's holdings have surpassed 461,000 Bitcoin, worth more than $48 billion after the company bought $243 million of Bitcoin on January the 13th. According to MicroStrategy's portfolio tracker, the company's Bitcoin holdings have an unrealized gain of $19.3 billion. The report comes 6 months after MicroStrategy agreed on June the 3rd of 2024 to pay $40 million to settle a tax fraud lawsuit that had accused it and Saylor of tax evasion. The Attorney General of Washington, D.C. sued Saylor and MicroStrategy in August of 2022, alleging that the executive had paid no income taxes in the district for at least 10 years while he lived there. Well, MicroStrategy and cryptocurrency exchange Coinbase have pushed back against the corporate alternative minimum tax regulation. The two firms requested that the U.S. Treasury and the IRS adjust the final rule to exclude unrealized crypto gains from the adjusted financial statement income statement to avoid serious unintended consequences to U.S. corporations holding substantial cryptocurrencies. The two firms wrote in a joint letter to lawmakers on January the 3rd, quote, the unforeseen combination of the CAMT, the corporate annual minimum tax or whatever, and a newly promulgated accounting standard are creating unjust and unintended tax consequences. CAMT imposes a 15% minimum tax on the AFSI of any corporation whose AFSI averages at least $1 billion in the prior 3-year period. Because the standard affects the corporation's AFSI, corporations that own enough appreciated crypto to be subject to CAMT must now pay tax on the unrealized gains in the value of that cryptocurrency, the letter stated. The tax laws increased investor interest in June of 2024 after the IRS issued a new crypto regulation which will make U.S. crypto transactions subject to third-party tax reporting requirements for the first time. Starting in 2025, centralized crypto exchanges and other brokers will start reporting the sales and exchanges of digital assets, including cryptocurrencies. According to the IRS, the decision aims to help investors file accurate tax returns with respect to digital asset transactions. Oh, that's bullshit. That's not what they're doing. They don't care if we file accurate tax returns. In fact, they don't want that. They just want the money. That's all that shit is. Anyway, the decision could push crypto investors to decentralized platforms in a paradoxical situation that could make tax revenue harder to track. Andy Leon, author and intergovernmental blockchain expert, told Cointelegraph. Showcasing the crypto industry's backlash, the Blockchain Association filed a lawsuit against the IRS back in December of last year, arguing that the rules are unconstitutional because they include decentralized exchanges under the broker term, extending data collection requirements to them. So, MicroStrategy, it's going to be interesting to see how they react, and I'm really surprised that this is the first that I'm hearing about this, because this whole letter was written by Coinbase and MicroStrategy and sent on January the 3rd. The letter itself is actually dated January the 2nd. So who knows how the hell this is going to go. But one thing, if you missed it, as of this year, all brokerages in the United States are going to report anything that you do on their exchange to the United States government, specifically the Internal Revenue Service. So if you go buy something from if you go buy Bitcoin from Coinbase, that gets reported. If you send that Bitcoin to a different wallet, that will probably be reported to Coinbase or to the IRS. If you sell Bitcoin on Coinbase, you can bet your bottom dollar that's going to be reported to the United States IRS. And that's not just Coinbase or Kraken or whatever. Like Cash App is probably going to have to do that too. In fact, I just make the assumption that they are going to be a broker and that they are going to have to report this stuff. So if I buy and sell or whatever on Cash App, you can bet your bottom dollar the IRS is going to get a report from Cash App that says exactly what I did and exactly what time of day I did it on exactly what day. So just be aware. Meanwhile, let's run the numbers. CNBC Futures and Commodities. West Texas Intermediate oil seems to be holding steady at $74.71 after a 0.12% rise. Brent North Sea, likewise, it's up a quarter to $78.52. Natural gas is up, 1.25 to $3.99 per thousand cubic feet, while gasoline fell half a point to $2.05 a gallon. Gold is up a half to $27.80 and 60 cents. Silver is up 1.1%. Platinum is up 0.15, but copper is down a quarter, as is palladium. Agricultural futures, the biggest winner is sugar, 2.03% to the upside. Biggest loser is wheat, 1.8% to the downside. And then I got live cattle, which is up 1.25%. Lean hogs are up 1 1/3, and feeder cattle also up just under a full point. But the Dow is down a quarter, as is the S&P. NASDAQ is really sucking swamp water. It's down a full half point, and the S&P Mini is down 0.13%. Bitcoin did okay. Not bad. 106,600 puts us at a $2.11 trillion market cap, and we can get 38.6 ounces of the shiny metal rocks with our one Bitcoin, of which there are 19,814,366.89 of, and average fees per block remain fairly low, nice and subdued at 0.05 BTC on a per block basis, and there are only 45 blocks carrying a scant 112,000 unconfirmed transactions waiting to clear at high priority rates of 2 Satoshis per VByte. Low priority is the same at 2 Satoshis per VByte. Hash rate over a 1 week rolling average, and that is the security of the Bitcoin network, that's what it represents anyway, is 781.2 exahashes per second, which is pretty damn high. From yesterday's episode of Bitcoin and entitled Wartime Scammer, Kaz Peeland with 1,000 says, "Oh no, my modem was down, so I did not stream sats through AlbiHub Podverse. Let's boost. I appreciate that, Kaz. God's Death 537, thank you, sir. Happy belated birthday, brother." Oh, dude, I appreciate that, man. Mark with 210 says, "Thank you, sir." No, thank you. BTC Master with 121 says, "All sats matter at allsatsmatter.com." Pies with 100 says, "Thank you, sir." No, thank you. And then there's my friend Biro Bella, who, if you're not following BIROBELA over on Nostr, you're missing out, because he just brings all kinds of neat stuff, like interesting baseball swings with a baseball bat came out today, and it was actually rather mesmerizing. He's got great content on Nostr. If you're looking for somebody that's got great content, follow my friend Biro Bella, BIROBELA. He says, "NunyaBidness is pissed in this one. First time I hear him pissed." Yeah, it's because I was going off about the murder for hire charges that people keep bouncing around with Ross Ulbricht. I'm tired of listening to it. Please stop it. Please stop. That's the weather report. Welcome to the news you can use. This is actually the second part of the news you can use. Bitcoin is steady near 104,000 after the Bank of Japan delivers a hawkish rate hike. Now, if you remember what happened last July when the Bank of Japan did this, it caused all manner of problems, but it doesn't seem to be doing it this time. So what gives? Let's find out from CoinDesk's Omkar Godbowl. BTC held steady during Friday's Asian hours after the BOJ lifted the benchmark borrowing cost to the highest in 17 years while raising inflation forecasts. Quote, "If the outlook presented in the January outlook report will be realized, the bank will accordingly continue to raise the policy interest rate and adjust the degree of monetary accommodation," the policy statement said, citing positive outlook on wages and maintaining guidance to keep rising rates, according to Forex Live. The anti-risk Japanese yen rose over 0.6% to 155.12 against the US dollar following the rate decision. Still, risk assets remained resilient. Bitcoin showed no signs of stress, trading little changed on the day above 104,000. The futures tied to the S&P 500 also traded flat. And as we just saw, the Dow, the NASDAQ, the S&P, all of them are they're not really that affected. It's interesting because this whole thing boils down to the yen carry trade, which is people borrowing yen to buy assets, a lot of risky assets, because borrowing yen is cheap when you have interest rates at 0.25% or whatever, or these historically low interest rates that the Bank of Japan has had. You go and you buy this stuff, and then all of a sudden you now owe a shit ton more interest on the loan of yen because the Bank of Japan raised the rates. and you've borrowed the yen. So now your rates on that borrowed yen go up. So the next thing you know, you got to sell some of these assets, which are generally speaking riskier assets, to be able to cover the loan that you borrowed in yen. See how that works? That's the yen carry trade. Well, the rates just went up, and it doesn't look like everything shit the bed. So what gives? Well, the resilience in risk assets suggests that the market attention is increasingly centered on potential policy developments under Donald Trump. In comparison, the Bank of Japan's rate hike in late July had previously shaken risk assets, including cryptocurrencies. On Thursday, President Trump signed an executive order to ban digital dollars and promote, that's the CBDCs, and promote crypto and AI innovation in the United States. Meanwhile, the U.S. data released recently showed all tenant rent index, which leads shelter inflation in the CPI, rising at a slower pace last quarter. That has raised hopes that the Fed will walk back on its hawkish December rates forecast. They're hoping in the United States that we continue to lower rates. I still don't see that happening more than twice this year. I'm just giving my forecast there. All right, so Ethereum's looming collapse is a lesson in blockchain integrity. If your founder is not pivoting to a Bronze Age mindset in 2025, you're not going to make it. This is Bitcoin Magazine, written by Guilherme Girard. In the world of decentralized networks, the battle lines are drawn not just between different blockchains, but within the communities that they spawn. Bitcoin, having weathered its own civil war, has emerged stronger, proving its resilience and commitment to the principles of decentralization, freedom, and truth. Ethereum, on the other hand, is currently embroiled in internal strife, revealing a stark contrast in community ethos and leadership philosophy. Vitalik Buterin's recent tweets concerning the Ethereum Foundation's drama are a testament to this. They expose a community that seems to prioritize perception over substance, a hallmark of the bureaucratic and woke culture that has infiltrated society at large. Ethereum's approach, under Buterin's guidance, reflects a refusal to adopt the Bronze Age mindset that has been pivotal in Bitcoin's success. This mentality, often derided as toxic maximalism by outsiders, champions unapologetic truths and a fierce defense of core values like decentralization and security. Toxicity in this context becomes a virtue. It favors those willing to speak uncomfortable truths and maintain the integrity of a blockchain's original vision. Choosing the path of bureaucratic, human resource-friendly discussion leads to a landscape where managing perceptions overshadows achieving actual results. Ethereum's current predicament is not just a long time coming, but perhaps a necessary wake-up call for those who have strayed from the path of what blockchain technology was meant to achieve. In contrast, Ethereum's current turmoil showcases a leadership that is cracking under pressure, revealing Buterin's true colors, and it's not the first time. Bitcoin, unlike Ethereum, does not have a foundation, and this is by design. Does this make our governance process 100 times harder? Absolutely, and that's precisely the point. Even though I might not always agree with the criticism leveled at Bitcoin Core, I recognize the value of knowing that they can be replaced at any given moment. The Ethereum Foundation has always been a magnet for centralized control, and the power vacuum its collapse would leave would sow chaos. Bitcoin's governance might be organized chaos, but Ethereum is now facing a spell of unorganized chaos that could further tarnish its reputation. Good luck. I'd love to see Vitalik return to Bitcoin. He's undeniably intelligent. Yet, his current role as the man in control is exactly why Bitcoin avoids having a public figurehead. The plebs, the node runners, are in control, and that's the better way. The .eth community's apparent lack of commitment to these foundational blockchain principles suggests a future where Ethereum might not just suffer greatly from its civil war, but could also lose relevance. The irony here is palpable. While Ethereum struggles, other platforms like Solana stand to gain. But It seems like those making this migration do not learn from their mistakes. They recognize the ugly side of Ethereum and Vitalik, but instead of seeking the true axioms of a good network, they move to an even more centralized alternative. However, this shift is likely temporary. The so-called on-chain refugees fleeing the chaos of Ethereum will eventually find their way back to Bitcoin, the original and only cryptocurrency that has consistently delivered on its promises, without the drama. They need one more rug pull on the Solana side before they finally end their journey. Like all of us, Bitcoin only. This drama within Ethereum has been brewing for years, and while it might be late in coming, it's not soon enough for humanity. The time wasted building upon what some might argue is a fundamentally flawed system could have been better spent advancing technologies that genuinely uphold the ideals of decentralized freedom. As Ethereum continues to navigate these internal conflicts, it serves as a cautionary tale. It underscores the importance of a community that values truth over narrative, freedom over control, and decentralization over centralized decision-making. Bitcoin emerging stronger from its own civil war wasn't just about survival. It was about proving the soundness of its principles. Ethereum's ongoing struggle might just be the catalyst needed for the blockchain community to return to those roots, recognizing that in the realm of digital currencies, only those built on genuine, unyielding principles will stand the test of time. Okay, so it just gets worse over at Ethereum. It doesn't look like it's going to clear up anytime soon. And Ethereum continues to lose ground against Bitcoin. It dipped below 0.003. Is that what it was? Let me check. Just for shits and giggles over here. Come on, baby. You can do it. Come on. TradingView. All right. Right now it's at, 0.031 is what it stands at right now. However, at roughly around 12 o'clock a.m. last night, Pacific Standard Time, this son bitch hit a low of, 0.0314. It was way down there. I mean, it was really about to hit. Yeah, it was really about to go and hit. Actually, wait, hold on. Make sure about this, just so that I'm absolutely certain of what's going on. Yeah, low of 0.030 BTC on a per Ethereum or ETH coin basis. It's just, and it spiked back up. It got all the way up to 0.032, but now it's just drifting back down again. And this internal strife that they're suffering over there just doesn't look like it's going to go away. But here's the thing. There's a couple things in this article that I kind of want to address here about this civil war. It's this notion that they're going to learn their lesson, that the people that are escaping from Ethereum and going to blockchains like Solana are somehow or another going to get rug pulled by Solana and therefore just end up at Bitcoin. And I don't think this is true. I've been in this game for way too long. I've seen people just lie to themselves again and again and again and again, and they just don't learn. There's going to be plenty of people to rug pull from here until the day all of the people that are listening to my voice are firmly planted in the ground. Because greed is part of human nature, and because greed is part of human nature, you will always find somebody who is willingly going to give up their money because they think it's going to make them rich. These people are never going to learn. They're going to go over to Solana. They're going to stay over in Solana. If they get rug pulled of Solana, they're going to go to Tron. If they get rug pulled out of Tron, they're going to go to back to Sushi Swap. They're never, ever going to come back to Bitcoin. It's just going to be too painful for them to admit that they were wrong. That's the other part of human nature that works in tandem with greed, is just the inability to admit you were wrong and just do the right thing. No, 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 no. That's just not going to happen here. So I feel bad for the people out there at Ethereum. I mean, I don't feel that bad about it, but I do feel bad about the people that don't understand Ethereum the way that most of us probably in this audience understand what Ethereum actually is. And if you don't understand what Ethereum actually is, I can only try to dissuade you from even coming close to figuring it out. Just don't buy it. Stay away from it. It is a dumpster fire, and you don't want to have any part of it. Now, Breeze is in the news. They've raised $5 million to bring Bitcoin payments to every app. Okay, Bitcoin payments startup Breeze has announced raising this funding round from Entree Capital, Ego Death Capital, Plan B Fund, and Time Chain. Quote, we're happy to share that we've raised this $5 million to bring Bitcoin payments to every app. Well, what does that mean, dude? The firm said that in the 18 months since its launch, over 40 apps have implemented Breeze SDK in production or beta, providing approximately 1.5 million users with access to self-custodial peer-to-peer Bitcoin payments. Breeze SDK partners range from well-known names in the Bitcoin and crypto space to emerging companies including Relay, Cake Wallet, Clever, Yopaki, and Elysium Lab. And in 2024, those apps collectively processed over $4.5 million in gross transaction volume. The company is also preparing to launch Misty Breeze, a reference app demonstrating the user-friendly Lightning UX via their nodeless implementation and SDK. Additionally, the company is exploring new technologies to enhance the SDK and establish new standards for peer-to-peer payments. If you haven't tried Breeze and you want to just, like, if you're just experimental, go check it out, man. Breeze has actually been, the SDK has been around since, what did it say? Oh, God, it was just here. It was just here. Good Lord. 18 months since its launch. Yeah, that's the Breeze SDK, but Breeze itself has been around for a lot longer. They're old school, so go check out Breeze. That's spelled BREEZ. Go check out their SDK if you're a developer, or some of their wallet if you are not. Now, U.S. federal court rules that backdoor searches of FISA Section 702 data is unconstitutional. So it sounds like a federal judge did the right thing. Let's find out more. A landmark ruling comes from the criminal case United States versus Hasbajarami, following more than a decade of litigation. And the case involves a U.S. resident arrested in New York JFK's airport in 2011 en route to Pakistan, charged with providing material support to terrorists. After his original conviction, the government revealed that the case relied partly on warrantless emails between this gentleman and an unnamed foreigner linked to terrorist groups. These emails were collected using Section 702 programs stored in a database and later searched without a warrant using terms related to the defendant. Quote, to countenance this practice would convert Section 702 into precisely what defendant has labeled it, a tool for law enforcement to run backdoor searches that circumvent the Fourth Amendment, United States District Judge LaShawn Darcy said in the ruling released on January the 21st. God, it's my birthday again. Wow. The district court found that, regardless of the government's ability to collect communications between foreigners and Americans without a warrant under Section 702, it cannot typically involve a foreign intelligence exception to the Fourth Amendment's warrant clause when searching these communications, which is standard FBI practice. Quote, while communications of U.S. persons may nonetheless be intercepted, incidentally or inadvertently, it would be paradoxical to permit warrantless searches of the same information that Section 702 is specifically designed to avoid collecting, the judge said, adding that, quote, public interest alone does not justify warrantless querying, end quote. Furthermore, even if such an exception were applicable, the court determined that the privacy intrusion caused by reading sensitive communications made these searches unreasonable under the Fourth Amendment. So hats off to this federal judge who basically just told the DOJ that they can just go pound sand. Nice. It's a win for the Fourth Amendment, which has been under attack since the war on drugs. And if you didn't understand what the war on drugs was, if you were my age, or you don't understand what the war on drugs is because you weren't around in the 80s when Ronald Reagan was president and that shit came out, it had nothing to do with drugs. That's what they said. That's what they told us. And like good Americans, we bought it hook, line, and sinker and raised the American flag and said, rah, rah, let's go get them. No, what it was to undermine the Fourth Amendment. It was the ability for the government to start this this decades-long run of just being able to say, well, we can put a tracker on your vehicle and we don't have to tell you, and we don't need a warrant for this, and we don't need a warrant for that. And then the war that was actually, instead of being the war on drugs, was the war on the Fourth Amendment. When that really accelerated was with the addition of the Patriot Act. So you've got a double whammy. In the 1980s, you had the war on drugs, right? Nancy Reagan and Ronald Reagan singing Kumbaya with the rest of the country while our Fourth Amendment rights to privacy were eroded. And then the idiots flew the planes into the towers, or whatever it is that you want to say happened. I'm not even going to go there right now. But the Patriot Act did happen. There's no conspiracy there as far as whether or not that shit happened. The Patriot Act happened, and it threw gasoline on what they were trying to do with the war on drugs. And it worked. So now you can't go anywhere in the United States without face scanning, or if you want to fly on a plane, you got to get your body irradiated by God knows what that will cause God knows what, God knows when. You can't do any of the things that we used to do because we're not citizens anymore. We're chattel. And if you don't think we're chattel, I can't help you, because we have been turned into chattel. We are cows in a field, and we are being fattened, and we are either being milked or taken to slaughter later on. But there is no privacy. And the Fourth Amendment of the United States Constitution, or the Bill of Rights, which is part of the Constitution of the United States, was supposed to be there to make sure that all citizens of the United States felt secure and were in fact secure in their persons and their papers. You can't just bust into my house and start rifling through my crap to find something that you can pin on me, probably to get civil asset forfeiture going on like Lil Elites was saying. So there's a win. We have a win. So take the win, ladies and gentlemen, for the Fourth Amendment, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.